Now, according to ENY's overall banking confidence index, that fell from 62 index points in the second quarter to 58 points in the third quarter. Now, Emilio Pera, who's a financial services sector leader at ENY, joins us now for more. Emilio, when we break down the numbers that you published in this report, it seems as though there's really strong, vast differences between the retail sector as well as investment banking. And let's focus on in retail for a second. It seems as though there are concerns that are have been made aware of in the market, in particular with regard to unsecured lending as well as tighter regulations.
Yes. I suppose you have to unpack the retail banking, and what we've seen is that although the growth is still within the retail sector and financial metrics haven't deteriorated, there is concern around the future growth. And you mentioned unsecured lending that we've seen over the last couple of months since the beginning of the year, that the banks have pulled back based on the consumer and the concern around the consumer indebtedness. Also, if you consider GDP growth and the fact that we're not seeing a lot of that, and at the same time the labour uncertainty at the moment is creating concerns for the retail banking segment. So it's not so much the current state, it's more looking ahead and what the future growth prospects will be with banks that's been pulling back from mortgage lending, just especially if you look at the larger banks trying to reposition their portfolio or rebalance their portfolio, and that's also where we saw the strong growth in unsecured lending over the last year.
But investment bankers are shooting the lights out. It's almost like the financial crisis never happened.
What we saw throughout the global financial crisis was that as soon as you had an international shock, it had a direct impact on the confidence that we saw locally in the investment banking. What we've seen over the last 2 quarters is significant growth and definitely a lot more upbeat view, and I suppose that could be partly attributed to the slow recovery that we're seeing internationally, and we're seeing that across all product lines within investment banking, that there's definitely stronger growth.
But an index of 90, now I don't know how what the maximum index would be, but it would suggest if your overall index is now at 58 and investment banking has gone from 80 to 90, these guys have got so much work they don't know what to do with it. Their fees would be rocketing. It doesn't sound as though we're in a real world here.
I suppose 100 points is full confidence, so it's very close to full confidence, which we haven't seen in investment banking for a number of years, so it's definitely moving in that direction. But what we found with the investment banking confidence and looking at the confidence that they have in the market isn't necessarily directly correlated to the increase in revenue. It is more the confidence that they have in improvement in their environment, and that's where, as I mentioned earlier, looking at international markets where there's uncertainty, it has a direct impact on where they believe their transaction flows will be. But having said that, we do see positive growth in all segments. And also, if you look at the credit side, investment banks, they haven't tightened their credit standards, where in retail banks, significant tightening of credit standards. Although a positive on the retail side is that we have seen credit losses improving for the first time in a number of quarters, which is a positive sign.
Emilio, just on the investment banking, I understand that fee income is the biggest driver of profit there. Is it that the fees are just way too expensive, or based on the performance of the funds, that the better the performance of the funds, the better the fee payment?
Effectively, as transaction volumes increases, it has a direct impact positively on fee revenue. So that's effectively what's driving that.
Is Africa part of the confidence, the booming outside of South Africa's border?
Our index only covers the local banks, but obviously with the big four all having significant interest in the rest of Africa, it would have an impact. Although if you look at retail banking, it's probably more locally focused.
Well, as you say, a tale of two cities. What are the best of times, the worst of times? Charles Dickens. Tale of two cities, of course.